Hello everybody, it's Luther Wilson III here on another video recording for YouTube. It may end up some other places as well. Today is Monday, July 29th, 2024. Hope you're doing well. All right, so as some of you know, I'm a real estate professional, a broker, and an investor here in the Kansas City market. Been in the game for over a decade, investing, working with other investors, working closely with contractors, all in the realm of buy and hold, mostly buy and hold single family homes here in the Kansas City area. And over the years, I've learned a lot from my clients and mentors and partners going through the process myself as an investor, as well as helping a lot of other investors with their transactions and so forth. And I'm starting to put the word out a lot more about the experiences that we've had and opportunities we see here in the Kansas City market. All right, so again, our focus is on mostly B-class, some C-class single family homes. Our intention is to purchase them and hold them for the long term with the idea that they'll generate revenue, i.e. cash flow, each and every month, each and every quarter. And in today's video, I want to talk about 3 ways that investors can buy properties or investments here in the Kansas City area, all right? And I'm going to touch on each one a little bit and maybe elaborate in the future on one in particular that I see the most opportunity with in today's market, because things have changed. The market has shifted. Second quarter 2024 is a lot different than it was first quarter 2024, let alone how it was 2023 or 5 years ago, 10 years ago. And so a big part of what I've been working on in the conversation that I'm having now with my partners, with my clients, with potential investors, backers, and so forth has changed. We've had to upgrade, we've had to adopt to be able to stay relevant and stay active in today's market, okay? And so those 3 ways where I see amazing opportunities in and around the Kansas City market for those investors who want to buy and hold for the long term, all right? The first one is value add properties, okay? Houses, single family homes that need upgrades and repairs. A lot of people refer to this method as the BRRRR method, where investor buys the property, they renovate it, they refinance, they repeat, okay? That's one way. The second way where I see some great opportunities in and around the Kansas City market has to deal with notes, okay? So on a previous video, if you've been tracking me, you know that part of my specialty is doing seller financing. When we do seller financing, a note, i.e. a private mortgage, gets created. And that paper, which is known as, the note, is a tangible asset that can be traded, can be sold, you can do partials and so forth. So first one, value add properties, houses that need work. Second one, notes, okay? And there are 2 types of notes. You got performing notes and you have non-performing notes, okay? Performing notes, as you could figure, are notes that were created. In our case, 99% of our seller finance transactions have been contract for deed. In that case, the performing note would be one in which the buyer has paid on time or paid each month for an extended period of time. That's the performing note. The non-performing note would be a situation where the buyer is in default or they are on the verge of potentially losing the property, meaning that they've gotten behind on payments. Maybe we've given them grace and worked with them, given them additional time, and then they end up getting further behind. And that note can be sold to another investor, okay? So that's a little bit on the notes. And the third way, okay, first we went through properties that need work, renovate, refi. We talked a little on notes, performing notes, non-performing notes. And the third way where I see an amazing opportunity for investors to get in the game is to do houses that are ready to go. Livable properties. Some investors refer to them as turnkey properties. That's where I see a great opportunity here in the Kansas City area. That's where our market is. I try to stay in my lane. Our specialty, again, B-class, C-class single family homes. I see a great opportunity for investors that have capital and the ability to borrow. They can use leverage, long-term debt. 30-year fixed rate mortgages is usually the way to go. Non-QM loans on houses that are ready to go. Then from there, you can rent it out if that's what you want to do. There's short-term, medium-term, long-term rentals. And then in our case, you could do something creative from that point. You could do a contract for deed. You could even do a true seller carryback if you're comfortable deeding the property over to the purchaser, or you could look at doing a lease option, okay? So those are the three. You got properties that need work. Second one, you got notes, okay? Third one, you got vacant properties that are livable, ready to go. Those are three ways that I see quite a bit of opportunity in and around Kansas City for investors, people that want to place capital with a good operator or with an individual investor, making that happen, okay? Now, the thing about it, you have to look at your specific situation, how much capital you have to invest. If you're working with a capital investor, how much capital do the two of you combine? If one of them is putting up the money and signing for the loan, the other one may do the operations. That's how I've been rocking. We've seen a lot of success with that. How much capital do you have access to on the front end, and how you can use it, the terms of its usage? Is there a balloon? Does it need to be paid back in a short amount of time? Can that money on the front end be tied up for an extended period of time? Are you talking 3 years, 5 years, 10 years and beyond? If you structure things a certain way through a partnership, it could be second lien position debt. It could be some type of equity sharing loan. However you decide to place that capital, utilize that capital, whether it's yours or someone else's, again, how long you can use it, how soon it needs to be paid back, what are the terms of its usage, all right? Along with how much is there, then helps determine how you can place or invest that capital, okay? So in today's market, something that I have been talking about a lot more lately on social media and in conversations and presentations with potential backers and investors, potential clients. If I'm looking at a deal today in the Kansas City area, I'm looking at a $200,000 house that's ready to go. If I'm gonna go in and put 20% up to maybe 30% of the purchase price as a down payment, maybe more, then I do seller financing of some sort. We have to understand that that capital is going to be tied up potentially for the next 5 to 10 years, maybe longer. So that's why it's critical on the front end to know how much you have to use and how you can use that, so then you can create your exit plan from there. That's where I would go right now. Houses in and around Kansas City that are livable in that 170 to 250 ARV range or current value range. 3-bed, 2-bath with a garage in the basement ideally, okay? Even if we decide to go the BRRRR route, okay, which a lot of investors do, I am a fan of it. We have had some success with it. I've had clients who've had a lot of success with it as well. We just have to realize in today's market, how does that look with the cost of property, the cost of material and labor, the cost of the money that you're going to utilize. All of that has gone up the last few years. So the reason why I've been encouraging more investors to look at houses that are livable and putting 20 to 30% down is because if you're going to do renovations and refis, you may end up using short-term debt or hard money anyway. That costs quite a bit. And then you're gonna purchase the property, you're gonna renovate it, You still got to refi into the long-term debt before we can do the creative financing on the back end if you so choose, right? You may end up in the same position or perhaps in a worse position than you'd be in if you were to just buy the house that's ready to go, all right? So in some cases, it'll work great. You buy the property, you renovate it, you're all in at 75% of the after repair value. Then you can go into the refi and you may cash out, you may break even. Then from there, get the property cash flow and generating revenue, okay? So be mindful, all right? Again, so much with investing is reliant on the capital and the ability to borrow, all right? I talked about going into turnkey or livable properties. I touched on the BRRRR strategy, buy, renovate, refi. And then with the notes, those are super attractive. Keep us in mind for that. Right now, we have a list of notes, 70, 80 different notes on single family homes, some of them performing, some of them non-performing, right here in the Kansas City area. Similar type of thing is if you're gonna go the turnkey route, you're gonna have to purchase the note, okay? And you're gonna have money tied up potentially for the next 2, 3, 5, maybe 10 to 20 years, depending on how many payments are due or how long the contract for deed buyer or seller finance buyer has to pay you off. So that note, which you may be able to purchase for, on the low side, 30, 40 grand. On the high side, for a performing note, you may end up paying $150,000, $200,000 for that note, and you're gonna have that capital tied up for some years. So keep us in mind. I'm gonna continue to do videos, hopefully on a weekly basis. Follow me on LinkedIn, as well as Facebook and Instagram, as I'll be doing weekly content. And again, it's Luther Wilson III, Upside Property Services and Upside Capital. Reach out, hit me up if you want to learn more about our experiences that we've had over the last decade, working with investors closely. And hopefully we could put something together, help you with a transaction, maybe something that's creative if you're looking to place capital, if you have a seller finance deal that you need someone to help you talk through it, or if you're an investor and you want someone to assist you or represent you on your Kansas City portfolio, keep me in mind. All right, y'all, have a great day.